Which trading style is the best? Is it scalping? Is it day trading? Is it swing trading? Which is the most profitable one? Which is the most easy to use? If you have been asking these questions, you have come to the right place, because at the end of this video you will know everything that you need to know about all the different trading styles and which one suits you best. So the first trading style that we will talk about today is scalping. Scalping is a fast-paced trading style which involves opening multiple trades per day, multiple trades per hour, and capitalizing on very short-term gains. Scalpers usually hold their positions for seconds or minutes, and usually not longer than 1 hour, and they are trying to capitalize on very short-term price movements. Usually it requires help from technical indicators, because it's really difficult to predict the short-term movement of the price. So, and talking about the benefits, so there are some benefits to scalping. The first one is that you can make a lot of trades, and that means a lot of potential profits. So how does scalping look like on the chart? Well, as I've told you before, basically scalping is a really short term trading. So here we have our different time frames. We have hour time frames, we have daily, we have weekly, and here we have the minutes time frame. So remember, scalping is basically using very short-term time frames, and in this case usually I'm talking about time frames that are lower than 1 hour. So in this case we can go to 15 minutes time frame. And in terms of what strategies you can use, personally I am not a scalper, but I know that when you're scalping you definitely need help from some sort of technical indicators, and I do know one which scalpers use, and it is a moving average exponential with an input of 7. So basically simple moving average, and this is how it looks like on the chart. And basically scalping again is watching really short-term movements of the price, and in this case with moving average you are looking when the price crosses this line right here, and we can even scale down to lower time frames. Boom, so we are on the 5-minute time frames, and imagine that you are using this particular strategy, and over here we get a cross. So the price crosses the line and it goes downwards, and because we are scalping we will be opening a very quick position right here, usually when it crosses. And again, if we are scalping, remember that we are usually not looking to open any big positions. We are talking about positions with stop loss, for example 10 pips or 15 pips, and usually nothing more than that. And in terms of profit, again, we're looking at around 20 pips and nothing more. And boom, the successful scalping is when you get in quickly, the price moves in your favor, and then you get out. And this is basically the essence of scalping. It's very dynamic. It's very fast because the price moves fast. You have to make quick decisions, and it's up to you to find the best strategy. But there are disadvantages as well. It is really difficult to predict where the market will go when we are talking about seconds or minutes time frames. When you are a day trader, when you are using technical analysis and you are analyzing on the bigger picture of the market, then you can easily take into account trends, take into account some other indicators, market structure, and from that you get the general idea where the market is moving. But in scalping, when you're looking at minutes, it is really difficult to predict where the market will go at any given second. Now we can talk about day trading style. Day trading is different from scalping because the main difference is that it involves opening and closing positions within the same trading session or within the same day. And that's why it's called day trading. So day trading is different. It involves different strategies. It involves different approach to the markets, because now instead of looking at very short-term movements, you are trying to capture bigger movements, and you are probably will be using time frames like 1 hour, 2 hour, or even 4 hour time frames to analyze, make your decisions, open positions, and hopefully profit from that. So how does day trading look like? Well, first of all, I will tell you that day trading Good day trading, profitable day trading involves millions of things that you should know. It involves psychology, it involves technical analysis, and technical analysis is a little bit more complex than in scalping, but in this case it's usually much more correct and it gives better prediction. So again, if we go to time frames, day trading time frames are usually from 1 hour to 4 hours, and these we do not use daily or weekly time frames because these are too big. So now let's start with, for example, 2-hour time frame. So this is how it looks like now. Now we have much more information, and we can first of all instantly see that overall the price is climbing upwards. So we have an uptrend, and when you're scalping, the disadvantage is that you are never sure where is the major trend, and in this case we have a major trend which is going upwards, and then we obviously are using some sort of either supply and demand or support and resistance levels or key market levels. So here we have a few support and resistance levels, and in this case I will probably make a prediction that the price will go downwards to this point right here. This is where the retracement will end, and probably this will be our support, and here I will open a position. So day trading involves more planning, more analyzing longer time frames, analyzing the longer perspective of the price, and then making educated decisions. And the positions are usually much bigger, so we are talking about, now in this case it really depends. Some traders are using stop loss of 20 pips, some traders are using stop loss of 70 pips. So it doesn't really matter, it's up to you, but this is the essence of day trading style. And the last trading style that we'll talk about today is swing trading. Now, to put it in simple terms, swing trading is pretty close to investing. It's just basically trading on bigger, longer time frames, and usually it involves holding positions for a long periods of time, and I'm talking about days or even months. So that means that in swing trading you do your analysis, you have to take into account fundamentals, because fundamentals usually tell you the long-term position and the long-term direction of the price. Then also you should analyze the market structure, market trend, and all of these things, and you should think very, very long term. So what's the conclusion? Which trading style is the best? Which one is the most profitable? And well, the honest answer is that it depends on your own preferences. If you are a busy person, if you have a 9 to 5 and you are treating trading as more of an investment, as investing, so then the best trading style is swing trading. Maybe you do not have the time to sit actively day in and day out at the charts, and you just want to make passive income pretty close to investing, and then you just need to analyze the charts one time. You have to make the fundamental analysis, and then you have to find the best place to enter, and that's it. You just open a position and you wait. So this is a very specific type of trading for very specific people. So if you guys enjoyed this episode, subscribe, leave that like button. We have a lot of content coming during this summer, so hopefully you guys excited for that, and see you in the next one.